Bitcoin is holding around $115,000 to $116,000 this week. After a strong summer rally, the market is still consolidating. All eyes are on the Federal Reserve next week. Let's break down this from a long-term view, the weekly trend, and then finally, we're going to look at the daily picture. On the monthly chart, Bitcoin is tracking right inside the same rising channel that we've been watching for multiple cycles. The projected cycle top points at over 400K by late 2025 or early 2026. The relative strength index is still not overheated, which tells us that the long-term trend still has room before we see any kind of blow off top. So the big picture remains constructive. Now, zooming into the weekly chart, last week, Bitcoin defended the 110 to 112 support zone and bounced back towards 116K. The weekly 50-day simple moving average around 97,000. It continued to act as a major support, and we're consolidating sideways into the rising channel, which is healthy mid-cycle digestion. The weekly relative strength index is still sitting at the mid 50s, confirming that this is really just a cooling off period and it's not overextension or exhaustion. Now, what drove prices last week? First, softer treasury yields gave Bitcoin some breathing room. Second, ETF flows were modest, but they were net positive, providing steady buying pressure. Third, the surprise uptick in initial jobless claims took focus from the CPI print, which pushed prices up and pushed the prediction for a rate cut up to 100%. And finally, traders were still kind of cautious before the FOMC meeting that's coming this week, which it kind of capped the upside. On the daily chart, Bitcoin bounced right off of that support zone that we talked about earlier and reclaimed the 50-day moving average, roughly at $114,000. Now it's pressing back towards the resistance at $120,000 to $125,000. The momentum is ticking higher ever so slightly. The daily relative strength index is around 58 or so. So we're not overstretched, but volume remains light, which means that this move is more about consolidation than a breakout. So we're still sitting right between our support zone and our resistance zone. What I expect is that after the Fed cuts rates, we technically should see price move well above the resistance, but it depends on how much volume we have because you're going to have traders expecting the same and they're going to put on leverage. And when that happens, the market can do some unexpected things to try to go capture that liquidity. So if we have tons of volume, expect that prices will maintain and break above 125K. So we've really just been checking off all the boxes that we discussed in our previous weekly updates, with the focus this week being on the FOMC meeting on September the 17th, where we expect we get our first rate cut of the year. So to sum it all up, big picture, the cycle structure is pointing higher. We're a third of the way to the top. Weekly structure is strong, consolidating healthy. This has been the most orderly Bitcoin bull run that we've seen. Prices have never gotten really overextended by much this cycle. The Federal Reserve is the trigger, though. I expect a decisive breakout, but we have to remain cautious depending on how they guide. If I were a betting man, I would say that this first rate cut would enter us into the parabolic phase of the bull run. If you'd like a free PDF download of the weekly update, the link is in the bio. Follow me for more weekly updates.